Hi everybody, it's Derek Peever from PeeverCon Group of Companies and Platinum Standard Super Suites. I just wanted to share with you a philosophy around the seasons of real estate. So with all the uncertainty in the real estate market, I just wanted to share my philosophy around buying and selling residential real estate as an active investor myself since March 2006 when I bought my first property. I like to think of real estate investing in a slow, long-term, farming-like way and apply my tending of the real estate portfolio like how a farmer would tend to his crops throughout the various 4 stages of the seasons. It's also worth noting that the corporate housing industry, which is what I specialize in, tends to lag the residential resale and new construction market and general economic conditions. So let's get started with the first real estate season, spring. Now this is not corresponding with the actual calendar seasons, and some real estate seasons are quite short. Some can last indefinitely, so you really want to make sure that you're investing in a city with a future, not just a past. This can be best seen in the key economic fundamentals that drive real estate supply and demand, such as job growth, population growth, critical infrastructure expansion, transportation improvements, healthcare, universities, a pro-growth political climate, gentrification, lifestyle, climate, school districts, crime rates, to name a few. What the wise man does in the beginning, the fool does in the end. So the spring is the time when a few smart people realize it is actually getting better and they begin to plant real estate seed, such as negotiating low deposits on pre-sale condos and townhouses in new master planned resort style communities. Knowing that the birds are going to get some of the seed with challenging real estate transactions, mortgage rates, vacancy, repairs, it is important to be a contrarian investor, and the real estate spring, in my experience, is the best time to buy as the market comes out of a flat or depressed market and begins to appreciate. Although you may have left some initial profit on the table, for those with the stomach to buy in the thick of a real estate winter, at the time of maximum pessimism, which is actually the lowest price point. You want to do the opposite of the masses to get an opposite result of the masses. In my own experience in markets such as Alberta, Canada, patiently waiting longer and buying as the upswing gets a little momentum will be a much nicer long-term hold on the rental side as the market begins to appreciate, and you could avoid years of stress and cash calls until the sustained green shoots of spring arrive. We also prefer to invest in major markets with 75,000 population or more, hopefully avoiding the roller coaster of smaller speculative areas without having that inside angle. Real estate summer is a time to be tending to your real estate portfolio attentively, accelerating debt reduction and cash flow, while weeding the garden by purging and starting to sell the aged or underperforming real estate assets when an adequate profit can be made. I like to think about this along the lines of, is the crop still green on the vine, or is it weighted and heavy and ready to harvest? Summer is also a time to show your wartime general qualities and put in the day-to-day hand-to-hand combat required to keep the weeds and noxious bugs at bay, such as government meddling with regulation and taxation, strata or HOA challenges, vacancy, managing for cash flow, mitigating expenses, proactive maintenance and repairs, tenant damages and chargebacks, etc. Real estate summer is a good time to tighten your belt and live below your means personally while being an operational ninja. You need to be able to weather the long-term business cycles and credit cycles. The lesson of the Chinese bamboo applies here, where the farmer is madly watering and tending to a plant nobody can see. They think he's crazy, but the Chinese bamboo then sprouts and grows an insane amount in a short period of time. The question then becomes, did it grow to the sky only since it broke ground, or was it growing under the surface the whole time, thanks to the farmer's dedicated efforts? Real estate fall, also known as harvest time. My personal favorite, and oh so deserved for those that toil in the fields late night and early mornings while others are out at play. From the beginning of my real estate career in 2006, I did not have enough mature crops to make a meaningful bounty in the 2007 harvest but I was fortunately able to add value to the properties by renovating, raising rents, and ultimately recycling by refinance or snowballing my seed capital from 3 small condos in Agassiz to a townhouse in Pitt Meadows to 2 condos in Mission, and so on before I started using other people's money and creating an actual business. This was a concept I first learned in the Rich Dad Poor Dad series from Robert Kiyosaki and Ken McElroy. One of the beautiful things about real estate is that it is an inefficient market, especially with Texas being a non-disclosure state, and that the real estate market moves very slowly, unlike the stock market. When you start hearing rumors of bidding wars, sale prices well over asking, year-over-year appreciation far exceeding historical norms, you will know it's harvest time, and you must act decisively to capture that market demand. Warren Buffett says the market is here to serve you, not to instruct you. So feed the need aggressively while the fish are biting. Warren Buffett also wisely points out that you want to be holding a bucket, not a thimble, when it's raining gold. This helps if you are in liquid type properties such as condos, townhouses that are still in the lower to median price range. One key lesson I learned from Randy Dick, a top BC realtor, is that you never want to sell too soon in a recovery. This is a mistake I personally made after holding a challenged property in Abbotsford for 8 years. I dumped the headache as soon as I could turn a $25,000 profit, and the new buyer reaped our harvest in the following years. I was careful not to make that mistake again. However, I want to point out that I think we would all agree that purging your long-term holds within 10% of peak market is a pretty good result. And whether that is 5 to 10% before the peak or 5 to 10% after the peak, it's the same net result. You just need to have better properties, higher standards, crisper marketing and imagery, world-class service on the way down when others do not. For this, our competitive advantage, or moat around the castle of our business, has always been our jewel in the crown policy, which I learned from a great Canadian businessman, Terry Kahn. For example, we only buy in wood frame buildings top floor penthouse suites, corner suites, entry-level garden suites, view suites, and what I call wow suites with things like cathedral vaulted ceilings, etc. It must have something remarkable about it, not just a second floor suite facing a car dealership or a laundromat that was left over standing inventory from the builder. Some other factors that go into whether it is time to sell a property can be, did the management company change, or the old guard of the volunteer council is changing, the resident profile starting to slip, the economic life of the major components and corresponding financials of the homeowners association or condo corporation is leading to large assessments or cash calls. The area could be trending for the worst, the political climate, job environment trending down, oversupply of new construction. Is there new construction approved that will impede your current view? What are the interest rates doing, and how are they affecting the psychology of the masses, and how can we think differently on a contrarian level? Is the management enforcing patio and parking bylaws? Do you get a lot of negative feedback from the tenants? Is the common property and limited common property being kept up and maintained and pressure washed, painted? I like to sell properties 5 to 10 years into the holding period from new construction. At that time, the warranties are starting to run out, and with our Super Suite model, it is important to position the brand at the best new in-demand communities. We often sell our properties fully furnished and equipped to first-time homebuyers as an exit strategy. We once sold 3 condos to one investor, and he included a vehicle as part of his down payment, which I then gave to my mom for Christmas. Real estate winter. The least fun, for sure, but this is the time to sink or swim. And like my hero Warren Buffett says, you can always tell who's been swimming naked when the tide goes out. Some winters are mild, some winters are long and brutal. I have personally experienced a real estate winter in the Fraser Valley from 2008 all the way to 2015. As I was holding 50 or so marginally cash flowing properties, I was the definition of house rich and cash poor. I reduced my overhead from a 3,600 square foot detached home to a 700 square foot condo / office, and took a leave of absence from my job at C-SPAN to pursue my real estate full time. I literally lived on pasta and cashews. In this time of struggle, I listened to Jim Rohn, Les Brown, Tony Robbins, and many others to stay positive while I focused on managing and growing my portfolio by any means necessary. I kept unwavering faith that the real estate winter would eventually break and spring would come. I knew that if I could survive, I knew I would be sitting pretty for the wave of appreciation that would come in 2016 to 2017 like a tsunami washing over our established portfolio in the Abbotsford area. Like the ant, the proactive investor stays optimistic all winter and does whatever necessary to survive, going over, under, around any obstacle. They carry many times their own body weight and will simply do it or die. Unfortunately, in the real estate winter, very few fish make it upstream. A good steward of a real estate farm has already stored enough cash and line of credit reserves and has a critical margin of safety squirreled away. Heading into the real estate winter of 2022, our overall portfolio loan to value is sitting at about 50%. This is now the time to batten down the hatches and have funds to seize very select deals of the decade. Do you wish you would have invested more in the 2008-2010 downturn? Is 2022 to 24 the time to make your next investment move your best move? I believe so. Now that we have a toehold of 2 personally owned properties in North Austin and 3 limited partnership properties, we're actively building relationships and establishing our brand as we fight through one of the worst leasing downturns North America-wide since Q4 2019, Q1 2020. While year-over-year values in counties around Austin are still appreciating, some values have corrected 10 to 20%, with new construction opportunities really starting to emerge. This is the perfect storm for the way SuperSuites likes to acquire real estate. We will be negotiating on new condos and townhouses, buying in bulk, typically starting from 4 units at a time up to 50 units like we did in Abbotsford, BC, for example. By buying wholesale, we can negotiate lower deposits, the best unit selections, staggered completion dates, mortgage rate buydowns, cash back towards closing costs, vendor take-back mortgages, and other incentives such as additional parking and storage. We are buying in landmark projects such as the Summit in Georgetown, which includes the sought-after brownstone at the Summit, which we're shooting from today. It includes 4-story living, private elevators, rooftop terrace, beautiful views of the San Gabriel Valley, and wildlife like deer, large birds of prey, turtles, seen on a daily basis. Great walking trails for the family as well as live music and outdoor dining within our community. We also purchased townhouses from the same award-winning builder in Northline at Leander, which is a groundbreaking new town center being developed in one of the fastest growing communities in the country. We're also targeting Leander Springs, an exciting new billion-dollar development including a 4-acre man-made crystal clear lagoon. At SuperSuites, we specialize in helping people that have experienced a flood or fire or other event that makes their home temporarily unlivable. Where better to stay than a place like Leander Springs? We allow as short as 7 days notice to end after our 1-month minimum, and we offer direct billing to the insurance companies to make it easy on the insured homeowner or tenant clients. I have been very pleased with the fact that there's no property transfer tax, general sales tax, or the likes on any new residential real estate purchases in Texas, unlike the Canadian markets I'm accustomed to. The price per square foot is much less in the North Austin area versus the Fraser Valley with higher cash flow yields. To secure the same pre-sale townhouse in Austin, the deposit may be $20,000 US versus $100,000 Canadian in the Fraser Valley for the same comparable property. If done cautiously and with structured price increases in later phases by the builder, there's likely to be some appreciation in the property by the time we get occupancy. This is the leverage and the beauty of our acquisition model. We do not want to build the highways, we just want to drive them better than anyone else. So from there, we apply the highest and best use rental application, which is SuperSuites, fully furnished and equipped all-inclusive rentals. We like to fish off a few piers for our corporate clients: insurance claims, corporate relocation, healthcare, aerospace, construction, professional sports. Could be in-betweeners that are experiencing closing date misalignment or common new construction delays. Our average tenancy is about 3 months, with some clients staying continuously for years. One advantage in operating in 4 provinces and 1 state is being able to see and compare the market trends in each. For example, when one market seems overpriced to the locals, it may actually be relatively affordable compared to other markets and coastal markets. Today is November 10th, 2022, and Austin, Texas area is currently in the throes of a real estate winter. Earlier this year, SuperSuites LP2 secured several jewel-in-the-crown properties north of Austin in some of the hot spots for growth in the area like Georgetown and Leander. These are in the main path of progress up the I-35 tech corridor north of Austin, otherwise becoming known as the Silicon Hills, where many major companies from California and elsewhere are relocating to the Austin area. At Peever Properties and SuperSuites, we have a strong track record of never having lost an investor's money in 16 years on an exited deal. We have never received possession of a new construction property and had it appraised for less than we paid. Rule number 1 is don't lose money. Rule number 2 is don't forget rule number 1. The market momentum in the Austin area is truly a global success story, and with this week's US election results in, it is likely that the second wave of business owners and families will be migrating from states like California and New York to states like Texas and Florida. This great migration, along with the future new residential construction pipeline slowing, could absorb the recent increase in inventory and put some downward pressure leading back into the balanced or seller's market territory. We are raising investment capital now to take advantage of this unique buying window with the next SuperSuite LP2 investor closing January 1st, 2023 for Canadian accredited investors, friends and family. Those that have the courage to act in these uncertain times stand to reap the bountiful harvest of 2028 to 2030 as Austin continues to become a global technology and innovation hub with highly attractive lifestyle for families to relocate. This investment opportunity will be closed to new investors in August 2023. Thanks for watching, and I hope this video was helpful. If it was, please like and subscribe as I will be bringing more quality content, including a YouTube video series called The Road to $1 Billion, where I walk you through every single real estate deal I've ever done, right from a $65,000 condo as my first purchase to a $20 million bulk acquisition in Abbotsford, BC. I'll be sharing the lessons learned, tales from the trenches in this series inspired by the apartment king Dave Lindahl, author of the books Multifamily Millions and Emerging Markets. Take care, and remember, it is always darkest in the real estate winter before the dawn of a new spring. However, keep in mind, spring always follows winter.